Welcome back. You're watching India Market Open. The cues from Asia are fairly muted, but let's not forget that we've had a party of our own. And this morning as well, implied Nifty is indicating to a flat to slightly higher start. There's a good chance that the markets will consolidate. Tomorrow is also a holiday locally. You've also got the weekly expiry today. So on back of those two factors, you may see a flat to slightly lower trade close out in the session. Well, that's what the picture looks like. Nifty futures are trading at a premium and there's an increase in open interest, very clearly indicating the trend on the Nifty continues to be upward and bullish. And interestingly, this has changed. So the last few days, what we were noticing is that there was no decisive direction that was emerging for Bank Nifty. This morning, of course, Nifty Bank trades at a massive premium. Open interest is also 4.5%, indicating that long positions are actively being built on the Nifty and in terms of Bank Nifty as well. That's the distribution in terms of OI. 25,000, like you can tell, has the highest highest call OI that was seen in trade yesterday. That was followed by 24,900 and of course 24,700 and 24,800 on the upside. On the support side, 24,500 saw a maximum put OI being seen, indicating that is an important level of support for the markets now that the Nifty has taken out levels of 24,600. 24,400 is the other level you want to track. Well, in terms of Bank Nifty, the trading range is fairly large, but 52,000 continues to be an important level of support for the markets. For Bank Nifty, that's where you've seen the maximum put addition in terms of Bank Nifty. On the other side, apart from that, you've also got 52,500 that becomes important in terms of support. On the upside, 53,000. So like I said, it's a 1,000-point trading range on the Bank Nifty. 53,000 is where we saw maximum call OI, which means that is an important resistance that the street will be facing when it comes to Bank Nifty. But the trend, like I said, is looking a little more positive on Bank Nifty after that little recovery that we saw in the second half of trade yesterday on back of a bunch of those PSU banking names gaining in trade. Well, let's take a look at how stocks are turning out to look this morning. Stocks like IndiaMart and Alchem Labs saw long built up. You had Asian Paints that saw short built up. Remember, Asian Paints goes into earnings today. So very interesting that that's how the markets are looking at it. ONGC, which is one of your top gainers, and Maruti as well, saw long built up. Both those counters were your top gainers in the Nifty 50 yesterday. Well, TCS, remember that was the big performer last week on back of strong earnings, but the counter has witnessed long unwinding. Emphasis, Apollo Tyres. Apollo Tyres, member, has seen short covering, and this one becomes important because, like we said, it spent so many days consolidating that post short covering, what you may now see again on the stock is a long built up taking place. Along with that, L&T Tech looked weak. India Cement, which is in an F&O ban, continued to see some short covering. So that's largely what stocks look like. But we have Amit Goel now joining us with his F&O strategies. Amit, hi, thanks for joining in. Amit, yesterday's rally was rather unexpected, but we still managed to do well. We closed at a record high. We're going into trade this morning fairly flat. Tomorrow is a holiday. Today is the weekly expiry. Do you feel today could be a day that the markets may potentially consolidate and may even close lower on back of the recent euphoria that we've seen?
Hi, good morning, Samina, and good morning to all your viewers. Thank you for having me again.
Amit,
yes,
I can't hear you.
1 second, let me check.
Every time this.
Hello, am I audible now?
Yes.
All right, so let me begin again. Good morning, Samina, and good morning to all your viewers. And thank you for having me again. Yes, Nifty has been, in fact, both the indices have been on a tearaway run. We've been, inching up every day, punching new highs. And I would tend to agree with you that we might be in for a breather. I don't see a major price correction in the markets, but I do see some bit of wait and watch kind of a trade, which is basically a time correction mode in the indices at least, for want of a major trigger, which is budget in the next week. However, we need to have a bias as a trader to trade these markets, and the bias remains on the upside. So any dip in the major index, which is Nifty, at about 24,500 or dare I say 24,400 levels, I would look to build some longs from there and play on the long side for a new all-time high with about 200-300 points as a reward for this. The reason why I say 22,400 and not 500, we all know 24,500 is a psychological number with a lot of put over, built up over there. But if you also notice the ATR of Nifty, which is about 200 points, so I would say that there could be a slippage on the downside if the market tends to correct a little, and that could give us a better opportunity in terms of a risk reward. So that's essentially the play on Nifty.
Right, Amit, what about Bank Nifty? We did see a little bit of participation coming in from Bank Nifty yesterday on back of PSU stocks, doing a catch-up rally. How would you trade Bank Nifty? Do you expect it to continue with an upward journey? Do you expect it to be range-bound? What is the trading strategy on Bank Nifty?
SBI has been one of the strongest performers in the banking space, especially the PSU banks in this year of 2024. In fact, that happens to be one of my picks also. The day I met on the 1st of January, this was the pick that I had given to Agam. But speaking about Bank Nifty in the shorter term, this has been a little weaker on account of primarily HDFC Bank's underperformance in the last few days after the business update. So while Bank Nifty, we had traded Bank Nifty last week with a downward bias, but we felt that there won't be a major price correction, and hence we had played a bearish to sideways sort of short strangle. We are currently looking at collecting all the premiums in that trade. However, right now, Bank Nifty has taken support at the lower levels of 52,000 and is, showing some bit of positive traction, closing above the 20 DMA also. The bias again in Bank Nifty remains on the upside. However, I feel given the chart and the price action formation, Bank Nifty is likely to be likely to trade in a broader range. Again, the trigger happens to be budget, which is of course well known. So I don't see a major price movement in either of the indices. So the way I would like to play Bank Nifty is I would set up a short strangle for the next week, which is the 24th of July, wherein we sell the 51,000 PE one lot and the 53,500, which is the recent top, near the recent top. So I'm looking to build a fairly large range of 2,500 points, and Bank Nifty currently is hovering around the midpoint of this range. So I'm not building a bias on the either side, but I'm looking at a sideways correction, and the maximum profit on this trade is about 4,500, whereas we will keep a rupee stop loss of about 2,250 or 2,500. Given a margin of 93,000, this gives us a cool yield of about 4.5% to 5%. However, since we have the budget on the 23rd of July, I will advise all the short-term traders who are likely to enter into this trade to exit this trade on the close of business on the 22nd, which is Monday, whether we are in profits or loss. I don't want to enter into a budget session with an unhedged position like a short strangle.
Amit, we go into it. Today would be the last trading day before Infosys reports on the 18th, which is Thursday. How would you position yourself on Infi today?
Yeah, all the IT stocks have given a breakout after the consolidation and the downward movement in the last quarter earnings, which surprised or which were underwhelming. Now with TCS giving good guidance, fairly good guidance, and the kind of run-up we have had in anticipation of this, I believe currently I do not see a major move further in Infosys. In fact, if you look at the option chain, the 1700 call stands at the tallest in the sense that is the near-term resistance, and the way I would like to play Infosys is slightly different, slightly interesting. The way I want to play this is through a volatility arbitrage trade. See, the July implied volatility for Infosys is running at 38%, whereas the August it is running at 26%. So there is a good 12% differential that we can capture here. How I would play this is, I would buy the 1700 put for July and sell the 1700 put of July, one lot, and buy the August 1700 put, one lot again. What this would do is, this would give us a structure known as a long calendar spread, wherein the essence of this trade is that post the earnings on the 18th, by 19th and 20th, we would see a lot of volatility cool off in the near-term expiry, which is July, and which we have sold at about 38%. So the overall reduction in the volatility will give us the returns, and any sharp movement in the underlying should also be protected. So the range that we are getting is about 100 points. So it's a fairly wide range, and we are able to collect that as well.
Right, I mean, that was an interesting strategy, both coming in on Bank Nifty and Infosys. With that, it's thank you for joining us. With that, it's over to you, Tamina.